Are you a real estate investor looking to sharpen your skills or a newbie looking to become one? You're in the right place. Welcome to Where Should I Invest? Real Estate Investing in Canada with your host, Sarah Larbi.
Welcome back to another episode. I am Sarah Larbi and you are listening to Where Should I Invest? Today's guest is Glen Sutherland. You may know him already from his own podcast called Canadian Investing in the USA. And that's essentially what we talk about in this podcast is the differences between US and Canadian real estate investing. And he is a Canadian from Cambridge, Ontario, and he started investing in real estate locally and then decided that he wanted to invest in the US for lower property taxes, lower cost of entry, potentially, also more favorable laws, et cetera, et cetera. So we go through that again in detail on, some of the reasons why he decided to go and invest in the US and what he's been able to do by doing that strategy instead of investing in Canada. And I still love investing in Canada, but, always look for the different opportunities, but careful not to have analysis paralysis, pick your strategy. But this podcast is really cool because I think it's just important to understand as Canadian investors, if we wanted to go into a different country, specifically in this case, the US, what we need to know and what we need to do and what we could have in terms of wealth creation. And there's pros and cons, right, to every single market. So that's what we talk about today. And by the way, my Burr Freedom community is launching. It is launching in January. It's going to be a 12-month online virtual community where we are going to go through everything that you're going to need to know about the Burr strategy over that 12-month time frame. So check out my website, sarahlarbi.com, and that will be up for you to join. It is going to be limited in spots. It is definitely very affordable, but it is going to be limited. So, we're going to cap it, and then essentially there will be a waiting list. So with that said, guys, let's bring on Glen to the show, and I hope you enjoy this week's podcast. Glen, welcome to the show. How are you?
Great.
Awesome. All right. So for those of you listening, Glen is a Canadian investing in the US, but I won't spoil it. Glen, why don't you tell us a little bit about what you do, who you are, 30,000 foot view?
Sure. Well, I'm Glen Sutherland. I live in Cambridge, Ontario. Based on the sign, I do invest in the United States. I did start by investing, doing all my investing in locally, Kitchener-Waterloo, Cambridge, over by London, in this area, and I just spread out into other markets. I raise money, I do joint ventures, and we buy properties cheap and renovate them and either refinance them or flip them.
Very cool. So why did you get started and then say the US is the way to go?
Well, once I got comfortable with a bit of distance, I had a tenant that moved over to the other side of London who was in Cambridge. It was my best tenant. And once I was comfortable with that sort of space, which is like a couple hours away from my tenants, then in all honesty, if you look at podcasting like 3 or 4 years ago, it was maybe 5 years ago, it was all American. Like it was all American. So I got so much American information and took notes and absorbed. And I finally just went, I'm going to take a stab at it. And it's worked well for me. So we keep doing it. I have a whole bunch of reasons why I do it. But yeah, that's basically it. It worked, and it was repeatable. It was affordable. Anyway, I have a whole bunch of different things we can go into.
Awesome. Yeah. So where in the US did you decide to invest?
I started in Huntsville, Alabama. And I can go into my whole thing about why, but it's a growing city. A lot of Trump money went into that city. Toyota, Mazda, Blue Origin, which is an Amazon affiliate. The Air Force is there, the Army is there, the NASA is there, the FBI is there. So it was like it was a small city that had the potential to grow a lot, and it has. All my properties have almost doubled in appreciation. So that's why I started there. I went into Kansas City, Missouri. I'm wearing my Kansas City shirt right now. And then we went into Indy, and then Dayton, Ohio, and just recently started doing Florida.
All right. Now, are you holding on to the majority of these properties, or are you flipping them? You mentioned a little bit of both.
Yeah, about 50-50 we're holding and keeping. I have about in the 40s anyway properties I'm holding right now. But we a lot of it is, I've found, in order, if you want to be able to actually get a good income from real estate, just relying on cash flow, it's a tough game because stuff happens, stuff breaks. It's nice to have these chunks of money that come in as well as a cash flow. I like to mix, and that's how you can fill in the gaps and pay for these roofs and stuff that breaks. And it makes things a little bit more easy. So I kind of do both.
Okay. So you've got your like nest egg strategy, and then you've got your accelerator strategy, as I like to call it. And so does Dahlia, my mortgage broker. You've got to, to scale. At some point you're in growth mode, and then you're in your mortgage pay down mode, but you need some of the accelerators to help you pay down the mortgages. So that's kind of, I think, what you're doing a little bit as well. Exactly, as you've got your nest egg and your accelerators.
I think I first read about it in that Stefan Arnio book. He's all about the new like current money, like a cash flow money and long-term money. You want to have mixes of all the different pieces.
Very cool. Awesome. So you're a Canadian. So obviously a US investing in a US person or American person investing in the US is very different than a Canadian investing in the US. And I know you're not an accountant or a lawyer or any of that stuff. So guys, you have to get advice. But what are some things that Canadians need to know as an investor going in, buying US properties? Can you share some of your biggest learnings?
Sure. So some of the like simple things is you really should be investing inside of a corporate structure. I know that's very common even for Canadians, but it's more so from crossing the border. You want to make as many walls between them and here. You don't want them coming after you personally for anything. They do like to sue. I've never really been sued. I've gotten one letter, but it turned out it was a mistake, but terrifying. But yeah. But basically you want to have, and corporate structure is a lot cheaper to set up than setting up like a true Canadian corporate structure. I set up an LP usually in the States, and they're like $700. So you can put, if you want to, you can have one for each property. I usually like to put about 5 in an LP. And that's just sort of because if someone does get a judgment, if you are negligent, they'll just go after that corp, right? So it's what's in that corp. Right. So you can have a nice wall. And in all honesty, a lot of the lenders, they want to lend to a corporate structure more than a Canadian. So it makes sense to set them up, and they're cheap. $700, it's not going to, it's US, 700 US, but it's not going to break anyone. It's not a really expensive structure. And yeah, it offers protection, offers more lending options, is one of the biggest ones. Oh, I could go into lots of stories of stuff I've learned, but yeah, you're going to need an ITIN number in order to file your taxes with the IRS. If you do pay taxes to the IRS, there is a tax treaty, so you won't pay them to the Canada Revenue Agency. It's kind of convoluted, and I got 2 accountants. I have an accountant in Dearborn, Michigan that does my American side, and I have an accountant Fort Erie, I think he is, here in Ontario. And there is a whole bunch of advantages to doing 2 separate accountants, the way the paperwork flows, because I don't know, I'm on a podcast, but there's lots of different different advantages by having 2 different people do the 2 different sides based on the way.
And guys, I will say, just get a good accountant that understands the regulations around investing in the US, and they're going to be able to handhold you for sure and help you, just like Glenn was able to invest and do certain things. There's always ways to structure these things.
Yes, and there is plenty of them in Ontario that have, there are certified cross-border accountants. Get someone who actually has like a certification or something regarding this. They're not just, oh yeah, I know how to take the paper. You want it done right, because with anything, just having a CPA do your taxes on your real estate rather than you doing it yourself, they'll likely find more money than you would have found, and to pay even for their fees. It makes sense to use someone who's specialized in that field.
Yeah, absolutely. What about from a financing standpoint? When you started buying properties, are you buying these cash? Are you going and getting loans? And if so, how complicated is that?
So I did my very first one cash. And then I refied it, what, maybe 6 months, somewhere in there, 6 months later, I refinanced it. And with that money from the first one, I bought 3 more with the same amount of money, because that's just how it sort of compounded. But the first one, it was a little tricky. As you go, it does get easier, because a lot of this is asset-based lending, which isn't really done in Canada. And so a lot of it's based on your track record, how much interest rate you're paying, and a lot of it's based on the property. Like, how does the property perform? How good of deal did you find? Because it's less risk for them if it's a really good deal, especially if it's on, like, say, a fix and flip loan. So you're buying it really cheap or something, but it appraises for, you bought it for 10 grand and it appraises for 100 grand. Like, the lender's going to lend on that because actually they probably won't actually lend on that exact scenario because it's too cheap, but they're looking for a good deal. That's where you'll get the easiest lending. If you're just buying at market value on the MLS, you can still find loans, but your terms won't be as good. Like, the better because it's based on the assets. So the better the deal, the better the rate.
It sounds a little bit too like commercial lending, even in Canada, right? I mean, it's property first and then the person second. So, you find a good deal with a good, NOI, net operating income in Canada. Even if you don't have, a job per se or whatnot, that's secondary to the actual property. So that's what it kind of reminds me a little bit like.
Yeah, the interest rates are a lot more expensive though. So that is the disadvantage of the US, is you better be ready to pay more, but for interest. But
So
you're
what
going
are
to
we
make
talking about roughly? Like, just curious. Like, what,
6 or
10%?
7.
Okay.
Yeah, for like a long-term loan, which, because the Americans, they're still getting their 3.5s, but we don't have the same check boxes that they can fill in for us. We don't have a social security number. We don't have a local residence. Like, another trick, I use my CPA for my addresses, because a lot of things insist on American addresses. You don't want mail going to your whatever, your properties or whatever. And that's the one advantage of having an American CPA, because then you can send stuff to him. If you have a Canadian CPA, you still need a mailing address. I know you can get the mail forwarding systems and everything else. I like that he gets the things, and I can get stuff, FedEx to him, or UPS, like instant stuff, and which I know some of the mail forwarding things won't do. Some of them will, I know, but
Okay.
I go on random rants.
No, that's awesome. All right. So when it comes to setting up your team out there and ensuring that you're not working so much inside the business and you're working on your business, how are you set up?
So, like, for finding contractors and stuff, that's what you mean. Off the start, I would your biggest problem with doing these renovations is your scope of works getting out of whack, or like that the stuff isn't in there, or your timelines, right? So if you want to first minimize your, like, scope of work mistakes, get multiple quotes, because different contractors will see different things. And don't just look at the price. Oh, that price, this one's cheaper than this. What is in there? And maybe the first guy missed some stuff that the second guy noticed, or maybe, and then you can go by price and try and, like, I like to try and make like 2 spreadsheets and, like, just, this is one guy's price, and match their quotes up, because they're never apples to apples. They're completely different. Some guys will just, like, here's the whole quote, 50 grand. Well, I want it broken down so that I can see what it is. And also, lender will not lend on a scope of work that isn't broken down. But yeah, by getting multiple bids, you can narrow down how much out of scope stuff you're going to have, because that's going to be your big money buster and carrying costs if your time is out of whack. Time is hard, especially off the start, to know if this contractor is going to be on time. And that, I've noticed in the States, is the biggest thing, is that often they can get the scope of work close. Some contractors aren't good at this at all, anywhere. And they like to do ads, which I hate, because that screws up budgets really bad. But timelines is where I've found is the biggest weakness, is that timeline, everything goes over time. And especially through COVID, we had a lot of problems where there was fewer people working for the municipalities, for the counties or whatever. And so if you needed to get an electrical inspection, which used to be like, they call them and they show up like a day or two later, 24 days to wait. So like
Wow.
your whole construction comes to a halt because you're like, I can't, drywall these walls up. I need it exposed for this electrical permit or this plumbing permit.
Yeah, we've had some similar things happen in some of the, cities and areas in Ontario even, and I'm sure the rest of Canada too with COVID, right? Everything gets delayed.
Yeah.
But, even so, aside from the contractor, like, let's just say you've got somebody listening right now thinking, okay, how do I even get started, right? Like, where do I even start looking? How do I even find a realtor? How do I find a property manager? There's all of those questions around it too. Before the renos, how did you go about, actually doing it?
What I did off the very start is I bought turnkey properties. So somebody else had taken a beat up property, fixed it up to rental standard, not to flip standards. And then you bought it for close to market value, but it came with all the pieces attached. It had like the property manager was attached, the whole thing was all, and I know in the big package, often had a lender who would lend to foreign nationals. The whole thing was done in one package. The problem with that is somebody else made all the money. Somebody else did the renovation and did all this stuff. So I did a bunch of those and I collected receipts as I went, and I could slowly like, hey, this is contractors who they use. And this, I already had the property managers.
Nice.
And people are usually pretty good at sharing their property managers. They're less giving on their contractors because they want to keep the contractors busy themselves.
So you looked at the receipt and you're like, I need to contact this contractor myself. That's brilliant.
Yeah. You're like, oh, I need the receipts, instead of just your property management statement, I want, can I get the actual receipt from the person?
Yes.
And they're like, oh, they're just not quite sure about us yet. So yeah, here's all the receipts. And you're like, okay, now I got a plumber. I got
Nice.
guys that are,
Awesome.
vetted. So I started doing stuff like that. And when you switch markets, you basically start over again. And a lot of it is getting referrals to people. You're like, I need a good property management. And you go on the Facebook groups, you go on some of their local meetups, because a lot of this stuff, especially now with COVID, everything's going online. It's easy to join groups in anywhere in the world and participate, and people will share stuff back with you. But that's the way to get your team. It's the way not to get your team is to go on Craigslist and find a contractor that can start tomorrow who isn't doing anything.
Never. Don't do that, please, anybody.
I get people call me and they tell me the story about how the contractors took them for a whole lot of money. And I was like, where did you get this guy? And they're like, oh, so I just Googled contractor in Phoenix. And you're like, ooh.
Yeah,
he was available to start tomorrow.
I mean, I think that's the biggest headache when it comes to like even just me with doing the BRRRR strategy, and I'm sure on your end too, is just finding the right contractors that are going to be consistent over time and keep their prices reasonable over time, right? Because like as they get even better and better and busier, prices seem to go up a little bit as well. And granted, I know materials and everything, especially during COVID, has probably taken a bit of a rise regardless, but it is a dilemma, right? And then you switch to a different place and then you're like, okay, I have a good contractor for this area, but they won't go all the way to this other area. So then you've got to rebuild. And I'll tell you that is like probably the biggest thing that I've had to go through, and I've got some good ones right now, but like it takes time to build. And then you have some, we've had a situation where we had a great contractor and, for the next property, he unfortunately got into the drugs and, it went downhill from there. So we had to replace him and, mid project, it wasn't very good.
No.
So tons of things can happen. Tons of things can go wrong. It's part of the game. Unfortunately, there's good and there's bad to it. It's not all fun and relaxing. There is stress to it for sure, but it's definitely worth it. And just out of curiosity, just as I don't know if you're able to share like what your portfolio even looks like. I mean, have you done, how many number of deals have you done, and what do you currently have in your portfolio roughly?
I don't know how many deals we've done. We have around 40 we're holding right now, in the 40s. I don't know exactly the number. I have to go get a sheet. But probably not a lot more than that, because I was mostly keeping them all. I'm not, the flip game is, I'm still fairly new to that. And so that's basically around how many I've done in the States is that. I did do a bunch in Canada before I went down there.
So about 40, right? So like how,
Yeah.
like, so so at some point in Ontario or Canada, right? When you scale up, it gets more difficult and more difficult to acquire. And I don't know, based on what you're saying, it sounds like in the US, it's more about the property itself. So does that mean that you can keep scaling and scaling with, some of the same lenders, or, how does that all work?
Yeah, they're not going to cap us, like, because we're not using, if you're using your social insurance or your social security number, they're going to cap you at the 10 properties. We're not using that. We're doing programs that don't need that. And that's why our lending is more expensive also. But we can have as many as we want. I guess it doesn't, we're not limited by how many properties. So I can keep buying them. The other thing is the way I do my joint ventures. It's a little different than the way most Canadians do them. So we buy the property into a corporation. We're both 50-50 owners. I'm the working partner. There's a money partner. But when we're qualifying for the loans, it actually is more beneficial to use me to qualify for the loans because it's based on experience and stuff. So I can give them the big spreadsheet with all the projects we've done. And that's helpful for the thing, but we're both protected. We're both in a corp. So it's not usually like, I know a lot of the Ontario ones where you have to do the piece of paper to protect the working partner because he really isn't on title or on the loan or on anything, right? So we don't have to do that because it's all owned by the corporation that we own together.
Okay, so the 40 are JVs, or are they like a split of your own stuff versus,
most of them are JVs. I think I've gotten 30 JVs. I hold about 10 myself.
Okay.
And I'm slowly selling those off too. It's like with everything, it's what happened is a lot of those properties at the start, they were turnkey and they didn't produce the way the properties I buy now do.
Right.
And I like to look at the portfolio every year and what are the lowest performing ones? And every time at the very bottom, it's all the turnkey ones that I bought. So why am I keeping these? Am I keeping it for the appreciation play? Basically, that's it right now. And because they're in, those core cities that I was pointing to at the start, which had some good economic factors, and they are appreciating very well. But at some point you go, we're even looking at refinancing. So, because that's what people are probably thinking, why don't you refinance them and keep them? But as you refinance these properties, the same thing happens in Ontario. They don't cash flow as good when you refinance them because you didn't buy a good enough deal. Right? You bought them off the MLS and you bought them for 100,000, they're worth 100,000, but now they're worth 180,000, right? You're like, oh, you could refinance it, but the rent hasn't gone up enough on some of those. And there's different reasons. So the ones that aren't running well, that's the ones to get rid of and then use that money to buy 4 more or 5 more. And you recycle the money around.
Yeah, no, absolutely. It makes sense. Now I will say though, there are some lenders in Canada, especially as you're scaling and you're starting, that will refinance as a home equity line of credit, a HELOC. So it doesn't necessarily raise your mortgage payments. It just allows you to have a line of credit that you can use towards the next property, and then you can calculate the cost to service that debt into the cash flow of the next one. So it doesn't necessarily have to be that way. So I don't know if in the US they do that, like the line of credit on the property, or it's a whole different thing out there. I don't know.
I haven't done it. I was actually just talking to Quentin over in Ajax, and he's trying to do it on some of his Tampa properties. Yeah. I've never done the line of credit. I don't know what kind of terms he's gonna get for it, but if it works out, then I'm gonna do it too. But in all honesty, I want to get my social security number before I get into that stuff, because I want to do that and then refinance a whole bunch of them and then sell off a bunch of the low producers. And yeah.
So I don't know if you know the answer to this question, and I was always wondering this, and if you don't, that's fine. And guys, by all means, like, not an accountant, not a lawyer, etc. But so I was always fascinated by the 1031 exchanges. How in the US you sell a property, if you buy another one of equal or higher value within a certain time frame, I can't remember what that is, but you essentially defer taxes. Yep. So as a Canadian buying in the US, how does that work? Or is that not something that we get the privilege to take advantage of?
We do get the privilege to take advantage of it. It is legal for a Canadian to do it. And yeah, basically what you're saying, you can just exchange a property for another property. The capital gain burden that you normally would pay just transfers to the new property. So the new property has to be more expensive than the existing property. So you can trade them around and not pay any capital gains. the trick, we haven't done one yet. we've been talking to several CPAs about it, and the worry is the IRS, no problem. They'll do it for us, no problem. The worry is that Canada Revenue might go, wait, you sold a property, and the way that the IRS will go, no, they exchanged a property, and it's all about how the paperwork lines up, like seeing the documentation that a CPA in the States would prepare. Would it say that it's a sale of the property, or would it say that there's been an exchange? And how Canada Revenue would treat that. Because the worst thing that could happen, you want to make sure you do these things right. That's why you get lots of opinions. Because the worst thing that could happen is that, yeah, the IRS says, oh yeah, you can defer this forever, right? And so you keep putting on new properties, starting a new amortization schedule, keep going, right? But Canada Revenue already gave you the capital gains tax. And then later, your kids or whoever who actually sells one of these properties someday, instead of 1031ing again, will get that tax burden that's already technically been paid in Canada, and you got basically double taxed. So it's about doing it right. I have heard that you can do it, but there's you got to have a super professional, not even just your regular cross-border accountant do this.
Right. No, absolutely. I mean, it is more complex for sure.
Yeah.
So, I mean, it sounds really intriguing. I want to go back to the JV piece. Are you JVing with Canadians, or are you JVing with Americans, or are you doing both right now, and why?
Mostly Canadians. Even my private money we raise is mostly Canadians. I've worked with like one or two Americans, not very common. In all honesty, mostly Canadians listen to my show. So it's Canadians we use. So we don't have all those benefits of, having a social security number and stuff, but I do have 2 joint ventures right now that are Americans. So we'll see how that goes. But I do like having this, it's, I don't know how to say this properly, but it's nice to work with Canadians. It's nice to work with someone I can go down the road or go meet up for a coffee, someone who's local. It's nice to have that there. Nothing against working with the Americans, but it's like, it's phone, it's distant, it's not as, even though I do have JVs out in Vancouver. So it's really, what's the difference there? But I don't know. I do mostly work with Canadians.
Canadians are nicer. I've said it. All right. Awesome. So and I want to talk about your show for a second, because you mentioned your show. How can people reach out and figure out what your show is all about and listen to your show?
Sure. It's on almost every platform. So YouTube, if you want to see us, Stitcher, Spotify, SoundCloud, Google Play, iTunes, Spotify. Did I say that one? Pretty much all of them. I just signed up for the Amazon Music. I haven't seen it show up yet, but anyway, it'll probably be there shortly. It's out there everywhere. If you want to start with one episode 100, it's every 100 episodes, I go and summarize like everything. And it's like a tutorial off the start of what to do as a Canadian. It's going to go into the like entry costs, the rent to value ratios, how to determine them, the tax benefits, what kind of loans they do, 30-year loans instead of 5-year loans for terms. And it gives you the whole breakdown. If you want to do a turnkey, how to do it, if you want to do construction, and it's just a sort of a big summary. It talks about taxes. It talks about lots of things. I want to build an index to sort of link people to certain spots, because I always get the same tax questions in my email, but there's like 6 episodes on taxes and with CPAs from Canada and CPAs from the US. But episode 100 will get you started. It's out there everywhere. If you want to contact me, it's glen@glensutherland.com, 1 N in Glen. And I'm always open to helping people. In all honesty, I don't like those like 3-page emails, because I was like, I'll look at that later. But
it is tough. And that's exactly what I do too. I'm like, I love that like they spent so much time writing stuff, but like sometimes I have like 200 emails. I'm like, I just want to go through them, and then I get back to them, but it's like 10 days later. I kind of feel bad, but I want to make sure I do my own.
Oh yeah, the 2 to 3 questions is perfect, and then we'll just do another email.
Yeah, for sure. And then sometimes it's just easy to like, once you start talking to people, like even just voice text. I love voice text. I don't know if you've started using it, but it's just like if somebody has an iPhone and somebody else has an iPhone, you can literally just press and hold, speak into it, and it sends it as a text.
I do that in my truck. I haven't done it on the actual iPhone.
Yeah, like it doesn't like translate into like actual like words. It's just a voice, like, I don't know, whatever you call it, with the, like the little wave thing.
Yeah.
Cool. Glenn, so I want to do our lightning round next. So I'm going to ask you a series of 5 questions, and you're going to give us the first answer that comes to mind. Are you ready for the lightning round?
I hope so.
All right. Number 1, what is your favorite real estate investing book ever?
Oh my God. Everyone gives the cliche Rich Dad, Poor Dad. I just read Pitch Anything last month. It blew my mind. I'm going to read it like 4 more times this year because you can't absorb it all, but not totally real estate related. That Keller Williams one, or the Keller one, what's that one called? Millionaire Real Estate
Investor. Yep.
That's solid. There's so many solid books. I have a book club also on Facebook. Every month we read a book, but Pitch Anything right now is the one that's blown my mind most recently because that was just last month's book. I don't know. I read a book every month, so I have tons of them.
Awesome. All right, cool. Lots of good tips there. Number 2, your favorite podcast that you like to listen to the most?
Well, I think the one I listen to the most is probably Epic Real Estate's Matt Terrio. I know a lot of it's on wholesaling, but I do pull a lot of tidbits out of that one. I listen to a lot of them. I like Joe Fairless's Best Ever Real Estate Investing Advice. I listen to that one a lot too, but he doesn't have daily podcasts, so I pick through and I can't listen to them all. It's too much.
I don't even know how he does a podcast a day. Like I do like this one every week, and then the other, like the Right Club one every week. And I'm like, that's a lot. Like imagine doing it daily. I don't even know how he does it.
I talked to him. He does it every Monday. He schedules 8 shows. He records 8, and he always has 1 extra. He does 7 days, and then he keeps bundling. And he's out like 6 months now because he's been doing it for so many years.
Yeah, no, I remember talking to him about it too. And I was on this show like maybe a year ago. I'm like, I don't know how you do it, dude.
Yeah.
Awesome. Number 4, if you lost all of your, number three, what do you do for fun aside from real estate?
I play hockey. My kid is really big into biking. So now I bike like 4 hours a day, it seems. He's got into trails and stuff, but hockey usually Friday and Sunday. And that's my big thing is I still like to play pickup hockey.
Very nice. All right. Number 4, if you lost all of your money and your assets tomorrow, how would you start again?
I would start a blog or a YouTube channel or a podcast, something to put out there. Even like people who haven't started, that's what they should do. And even if you're not an expert, do it as like, for dummies, and I'll learn. It's an awesome opportunity to basically pick anyone's brain and to grow yourself. And it also eventually will position yourself as an authority. And then from there, you can attract people to lend you nice, expensive private money to buy deals. As long as you have good enough deals, it works beautifully. And then you can do it all yourself that way, or you could do the joint venture path and attract people. That's probably what I would do. Wholesaling is great too, because they make big money, but it's a lot of work. You don't want to have I think you should be doing that full time, like not another job as well, because that's a lot.
No, exactly. Wholesaling is a full-time job, in my opinion.
Yeah, exactly.
All right, number 5, if somebody has $50,000 and they want to get started, how would you recommend that they spend that 50 grand?
I would tell them to wait until I have a cheap deal. The best way to do it would be a JV, because I do find deals. We bought our Glendale property for, I think, $8,000, which is a brick duplex side by side, which in Canada we'd call it 2 semis, but they call them a duplex because they don't split them. Lines in the middle.
For $8,000, like total, that was the price of the entire house.
That was the price of the purchase, yeah. And then we had to put in, I think, 40 or 50 grand into it. But we could make that work with 50 grand. We could do a cheap deal, and then we rent each side for like $900 a month. So it's like really, those aren't typical. Like you have to do some work. Like we were trying to.
Let me just put it this way: you find something like that, just let me know. I'll partner with you.
We find them. We need you to get really cheap properties, and it's like the thing is, if you're asking for a small amount of money, it's a lot easier to find people than asking for a lot of money.
Yeah, but the numbers, I mean, again, there's fundamentals in each market, right? I mean, to me, like you've got to have your core focus, your core strategy, your core area, and maybe that's it, and that's cool too. But I will say, like, there's downsides to cheap properties as well.
Oh yes, because sometimes they're not in the best neighborhood. And neighborhoods are more important in the United States than in Canada. In Canada, we don't have like
war zones.
B, E. We don't have spots that like isn't safe to walk through. We don't have that stuff, right? And so, yeah, they're the cheapest properties will likely show up in there. So buying based on price is not. We didn't even talk about my list, but buying based on price is not the way to buy property. You got to buy neighborhoods, crime maps, and you want it to be better than before. I don't know. There's a lot of, I could talk about that for like an hour, but it's important. It's really important. And our school zones school funding is not run the same as the United States. They're talking in legislation right now of changing it. But the way their school zones is, okay, there's these clump of houses worth like $500,000. So they have a lot more tax pool, and it all goes to the school inside of that zone. Whereas the school zone over here, all the houses are worth $30,000, and the tax pool goes to that school. How good do you think the school differences are? Huge. Mm-hmm. And people won't live on the one side of that road between the two zones because they are going to have to go to the other school. And nobody wants to go to that school. People go to that school because they have to go to that school.
Right.
And your property will never, even if you buy one just on the wrong side of the road, it'll never be worth the value of the other side of the road.
So interesting.
Yeah.
So I know you mentioned a little bit where people can find you, but can you just mention it again, just if anyone wants to write it down?
Sure. Glen at glensutherland.com is my email. glensutherland.com is the webpage. You can subscribe to all my stuff there. It has links to most of it anyway. I haven't updated it in, I don't know, a little bit, but should have almost all the podcasts and stuff. And yeah, email me. Let's have a conversation. I'm always open.
Very cool. What are your final words of advice?
Do your research. Work hard at your research, especially off the start. Don't get lazy on picking contractors offline. It's a bit of work. So do a lot of research, or buy turnkey and give someone else the money, or JV with someone else who's already doing it. That's the best advice.
Awesome. Glenn, thank you for being on the show. Really appreciate it. We'll have to have you back at some point. Investing in the US it's definitely interesting, but it's a lot of unknowns, right? For many Canadians. So thanks for sharing your insights.
Thank you for having me. Appreciate it, Sarah.
Thanks so much for listening to Where Should I Invest with your host, Sarah Larbi. Make sure to listen in next time. We'll catch you on the next episode of Where Should I Invest?